Hello everyone. Today I am going to provide you with an overview of MCX Natural Gas technical outlook for the coming week from PhillipCapital India. To start with, first of all, we will take the previous view outlook, what we had shared the outlook as on 29th of August for the last week. Natural gas ended at 744 as on 29th of August, and we have mentioned that the bias is ranged to up over and above 680 levels. But since it has formed negative doji on weekly candle, natural gas silver line will be at around 800 and 680 levels as initial support and resistance levels. That means we have mentioned that the initial crucial support is at 680 and the resistance will be at around 800 mark, and because it has formed a kind of negative doji at the higher levels, so the probability of natural gas coming down will be comparatively high. So it was mentioned that trading above 680 the bias will still hold range to positive. On the flip side, trading below 680 mark, the counter can attempt towards 600 levels. And that was a view which we have shared last week. In line with the view, as you can see here on the charts, this is a daily chart. So initially, natural gas made a high of around 764 levels. Thereafter, it slipped down to the lows of 688, which was close to its mentioned support of 680, and it bounced back marginally to end last week at 706 levels, down 5%. So our view was more or less in line with how the market has reacted. Natural gas bounced back from the lows of 688, but it slipped down from the highs of 766 and ended the week negative, down 5% at 706 mark. And as we can see here on the charts, it is still at a crucial support level of 680 mark. So for the coming week, what we have mentioned is that the silver line will be at around 700 levels between bulls and bears on the higher end. So trading below 700, the bias continues to be ranged to down. Any pullback toward those levels can be looked for contra trading shorts. High volatility can be expected, but at the lower end, it will be the support of 680 trading below which the bias will again enhance towards negative note, and it can attempt to retest the support of 600 mark. So overall, if we have to communicate and conclude, then we can say that for natural gas, which ended last week at 706 mark, initial range will be 680 and 740. Any pullback toward those levels can be looked for contra trading shorts, expecting retest of 680, and once 680 has been taken off with conviction, natural gas will be heading towards 600 levels. So the bias is sell on rise in natural gas, and further weakness will be expected only once it sustains below 680 for the target of 600 mark. Recently, we have initiated one strategy in natural gas that was as on 24th of August, when we have mentioned that natural gas can be sold at 743. Apart from that, we have sold 800, that is in the money put for 23rd of September expiry. So this position was a positional trade, and here the bias was ranged down, while the stop was mentioned over and above 850 levels on the closing basis. As per the payoff diagram, here the maximum return in this strategy would be when natural gas closes below 800 mark. The break even was at 850. So even if the counter closes around 850 on the day of expiry, that is 27th of September, this strategy would have fetched a return of 4375 per lot, but the maximum return as mentioned was at around 800 and lower levels. So since last week, natural gas ended at 706 levels, it has given a profit of around 38,125 per lot, and the position is still open. Thank you very much for giving your precious time. If you like the view which we have shared, you can contact us on the given mail ID and the contact details for further new strategies and the reports and outlook. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.